The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the February 15th wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. You can send me an email, steve@tfnn.com. And inside the Tiger's Den, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trade up 85 points, about 0.4% to the upside. Trading out at 20,591. S&P is trading out at 2344. That's about 0.3% to the upside. NDX 100 up 18 points at 5289. Russell 2000 turning just green here. Semiconductors are up $7 right now. Gold is up $7. Silver's up 7 pennies. A lot of sevens out there. Sounds like 777. Somebody might want to ring the register or pull that one-armed bandit. We've got the VIX index up a little over 8%. It's up 89 pennies, trading out 1163. We're going to talk about that in a moment. Leading the charge dollar-wise, the upside individual stock-wise or ETF is Priceline. That's up $11. Wix.com, that's up $9 or 17%. Bunge Limited or Bunge Limited, BG is the ticker symbol, up nearly 10%, $6 and change. BlackRock is up $6. NetEase is up 5. IPG Photonics up 5. To the downside, it is World Fuel Services down $6.50 or 14%. American International AIG is down about 10% or $6. Martin Marietta is off 5. Fossil Group is down 370. Nothing really huge to the downside. Percentage-wise, Fossil Group and AIG are the big leaders in the clubhouse. Now, we've had several requests already, so that's great. So we're going to take a look at Great Panther, the GDX, Pan American Silver, and Twitter. We're going to do that. But first, let's go take a look at, we'll probably do that in the second segment. Let's take a look at what the markets are doing. What is the message out here? And if we take a look at just simply the advanced decline oscillator readings, they're all above zero. That's the bottom panel of our screen out here. So that is positive. You don't need me to tell you that it is the bulls that are in charge of the market here. The very bottom right-hand screen, though, that's the interesting thing. And Peter in our Tiger's Den, Peter from Park City, he had picked up on it earlier. And then when I came back to my computer, I saw his message in there. And that was that the VIX was up. If we take a look at this here, you're looking at the left-hand box. Right now you can see the VIX index up 89 cents or about 8.2%. It was up higher than that earlier. It was over 9% out there. And he was making the point, hey, the market is up and the VIX is up nearly 10%. Because typically what you and I look for is when we have one-day rate of change of greater than a plus 10% out there, the market's usually forming a bottom or a bounce area. And we have really just the opposite, right? We have the S&P 500 traveling higher, right? It opened, it opened in essence at the lows. It's been trading higher ever since. And so I went back in my data the data really that I went back to, I stopped it at 2004, January 1st, 2004, to find any instances when the VIX index had a one-day pop of greater than 9%. Forget the 10%. Greater than 9%. Greater than 9%. And the S&P 500 not only finishing higher on the day, meaning the close above the open, but above yesterday's close or the prior day's close. And there is not a single, I mean not a single instance since 2004 since that has occurred. So I don't know what the Sam heck that means out there, but what I do know is this. Let's go take a look at it. What the VIX has is a rising bottoms pattern out here. Now, we're looking at line charts. We did this yesterday. We're going to go ahead and do this again because it is muy importante. If we take a look at the closing low on January 27th, that number was 1058. We're trading at 1162. Yesterday's close, by the way, 1074. So we still have a rising bottoms pattern with the S&P 500. That is the top chart out here, again, all on a closing basis, making higher highs. And each time, now again, we cannot use this as a timing model, but as long as this pattern persists, what I can tell you is it is an indication of a top, whether you like to hear that or not. Now, you don't have to believe me. I don't want you to believe me. I want you to go do the work, but I've done a lot of the work for you. So let's just simply go back in time. And when I say go back in time, what am I referring to? Let me see. Let's see how far back did I go in time. How about if we start in 1998? You know, and you take, now it doesn't tell us what the depth of that retracement is, but it is what it is. How do you like when people say that? I only say that when I absolutely have to. But you'll see a little rising bottom. So you'll see this is a consistent pattern out here. So we're going to go back, nearly 20 years. 1998, you see this little rising bottoms pattern. This is in December of 98. You can see the S&P 500 is moving higher. You get a nice little retracement here. You can see the same pattern back in 2000, January of 2000. You got the S&P moving higher. You've got a rising bottoms pattern inside the VIX index. What did it lead to? Pretty decent correction. In fact, that reoccurred back at the actual high in the S&P 500 on a closing basis in March of 2000. You had price moving higher. You had a rising bottoms pattern. I'm not suggesting this is the likely high in 2000 out here, but still, this is a pattern that did occur at that top. That's why this can be, and Stevie, as you know, has shifted to, there's a top of significance or consequence maybe that is forming out here. If we fast forward into 2005, you're going to see the same type of pattern. Here in July of 2005, you see that same type of pattern out here that has formed. This one is in March, by the way, of 2005. You'll see this pattern here in May of 2006, led to a pretty decent decline. So you see each of these. This is going into 2007, right? This is just simply consistent, and you'll find out if you go do the work yourself here back in 2010, April 2010. So you see we have price moving higher in the S&P 500. We've got a rising bottom. So we've got one, not where it's rising, but it's just simply making double and triple tests of a low on a closing basis. That led to a healthy decline out here. So guess what that actually means? Until the VIX index makes a lower closing low, and that would be below 1058 out there are problems that are brewing. The question is, when is that storm coming in? Steve Rhodes with TFNN.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 73, S&P is up 5. So the natural question is, Steve-O, you soothsayer out there. Then I think Johnny Carson was the one who always used that when he did Karnak out there. I don't have an envelope, but I know the question would be if I'm putting an envelope up on my by my forehead here. You want me to reveal inside that envelope. So what does this mean? You know, well, we know what the rising bottoms pattern inside the volatility index means, right? We know there is a storm that is brewing. The question is, when is that storm going to come in? Well, I think that maybe the volatility index is really the thing that is giving you and I that piece of information, or should give us that piece of information. And what we can do is we can just simply come over here, take a look at the volatility index. We look at Stevie's other red line. In this case here, it's red and blue because of this tool that I created. But this red line is just nothing more than the 50-day exponential moving average. Right now, it's priced at 1194. Volatility index, the spot volatility index is trading out at 1164. If we close over the 50-day exponential moving average, and this is where it's a real bonus for the bears out here, you do not have to put your shekels at work as we speak right now, because with this trading so close to the 50-day, you'd like to have some type of confirmation. And so any close above 1197 as we speak right now, this number will change, from moment to moment, so to speak. But you can put a 50-day, anybody can put a 50-day exponential moving average on the volatility index out there. That is likely the event or the trigger that says, okay, that would then be time to jump into the short side of the market. Doing it prior to that, you can get your, handed to you several times. And I can tell you from personal experience that is the case. So it's trading up here the way that we, that's giving us a great opportunity to go ahead. Exactly, assets. It's a great opportunity to go ahead and just keep your powder dry and wait for a convincing signal. Now, typically, if you see the red/blue line on the top portion of my screen out here, that's the volatility index, versus down below where you see my crosshair. As soon as you see a crossover of that 50-day, that is where you typically see some pretty decent movement to the downside. Does it work always? Geez Louise, no. I wish that it did. I certainly wish that it did. But it works well enough, substantially enough, And in this case here, it is actually a gift, I believe, at least to be able to go ahead and identify where it is that you should go ahead and try to put that short position on. For those of you that are swingish type traders, and at this stage here, I'm thinking this is more than just a swing of hitting a base hit, a double, a triple, a double gee. This could be the old grand slam out here. Again, anticipating the market to move lower for 2 to 7.5, 8 weeks out there. So enough on this, but this is asking Karnak to identify where is it. I'm going to tell you when to do it versus what that price will be. Otherwise, just sit on your hands. I think that is the safer. We're not going to catch the top tick doing that. So, but we already know that, right? So that's cool. Okay, so let's get back to some questions out here that came in earlier. The first from Greg, who wanted to take a look at Great Panther, and specifically what Greg was looking for was the TAS market profile. So, Greg, this is what's up on our screen. Let me go ahead and give them to you in case you're listening on your earpiece out here while you are at work, disguising what it is that you're doing. The top of the daily box is 212. We're trading right now at 212. You got to like that. The center of that market profile is 202, and the bottom of the box is 192. What does all that mean? That means that the distribution here is basically pretty even, Steven, and you should have good support at 192. We're trading right at the top of the daily profile, so that could be resistance. If we look at the left-hand side of the chart, it's made a 100% move, big, huge downdraft inside of Great Panther, GPL, on May the 2nd, 8 million shares to the downside. So you're coming up against a fairly good supply line. Remember, 8 million shares traded hands that day out there. And those people didn't feel really good about buying or adding Great Panther to their portfolio in the $2 range. They did not feel very good about it when it got down to $1.15. That was a loss of nearly 50% of their capital. So there is a supply line. This is no reason to get out of the stock. Don't know where you're in on this, but just expect and anticipate that you're going to, we've got our strap your seatbelts on because the ride could get a little bumpy. Now, if this thing can get up and over the resistance level, that is the high from May 2nd. That is room 222. Actually, it's $2.25. Then old resistance should become new support. That's really what it is that you're looking at. But this stock chart here looks marvelous, Marvy in my opinion out here, and it has more to go to the upside. But right now you are at a level that it could get a little rocky road out there, and hopefully that assists you. Had a request as well that said, Steve, what is going on with PAS, P-A-A-S? And as we take a look at it, this had moved lower today. But with regard to, and here's the difference between what we just looked at inside of Great Panther versus Pan American Silver. And that is with regard to the market profile. So just as it also, by the way, is up against a prior swing point, doing it with a lot less volume. That swing point on August the 18th at 2.7 million shares. And you came into 1.4, 1.4, 1.4. You heard me say 1.4. I'm going to say it one more time, and then 1.2, and then 1.5. You're coming into that swing point on a daily basis with light volume. On a weekly basis, it's even worse. So you already knew as you came to that swing point, you're coming in light. What did that mean? Well, if we just turn off price here, this is where these market profiles are really cool so that you can anticipate what is likely to occur. So you know you're coming into a swing point. You're doing it with light volume out here. Let's get the box out here. I want to turn off price. There we go. And now what you can see, in fact, I'm going to turn off the weekly profile because then this just visualizes it so much better. And it's all about visualization out there. How about that? I got it. So see this box out here? See how that center of the box is closer to the top? And I mean, not like by a small margin, like hugely closer. That is just I just flunked grammar school, as you can tell. But the center of the box, 2065, the top of the box, 2097, the bottom, 1874. So this area here, you're coming into a swing point, you're doing a light volume, says you can't really bust them up out here, and you have a price area, which is between 2097 and 1874 that says sellers are the ones in control of this area. We didn't have that in GPL because that center of the box was pretty much equidistant, right in the middle of the high and the low out here. So the only thing that's going on with regard to Pan American Silver, there's no reason to necessarily dump this, but you are just simply in a pricing range where sellers are in control from 1874 to 2097 out there. And so anticipate that this could even pull back into the 1874 level. Volume today, 2.6 million shares versus the high that it made out here recently, right, with about 1.5 million shares out here. Watch 1874 inside of Pan American Silver. Now, the next question was the GDX. Let's just do the same kind of a thing out here, and let's just study the market profile. See, this is the same thing, right? We've been taking a look at it. I know Tom, maybe he has sent in an email already. I haven't looked here. But the question about, hey, when to come back in on the GDX out here. And I think all you do is look at that profile. Looks just like Pan American Silver. You know, the ideal spot to add to come in is 2413, the bottom of that daily market profile. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Dow's up 83. S&P is up 6. The NDX 100 up 18 points. Let's go take a look at Twitter for QQQ inside the Tiger's Den. Now, Mr. or Mrs. QQQ, you have to reveal to me gender out there. You don't have to, but it would be helpful. In any event out here, let's take a look at Twitter. What I was going to say is I don't know whether you're long, you're short. You can't be short a $15 stock, so you're not short. I don't know if you're in it, looking to get in it, all those types of things, but it would be helpful. In any event, we're just going to take a look at Twitter and try to figure out what in the Sam heck it is doing out here. So let's do this. Let's turn off our market profiles for a moment. Let's go take a look at the last time Twitter was down at a swing point. And that swing point out here was a big downdraft. That was back on July 27. That was 2016. Let's just draw a line across the sand, so to speak, the bottom of that swing point. As I think I mentioned, volume there, if I did, 83 million shares. Now, the last time Twitter came down to test that 1569 level was 73 million shares. Still lighter than 83 million shares. And the very next day, only 29 million shares. What that was communicating to you, QQQ, was that sellers had they were gone. They had vamoosed. They had left, or there was just simply no more selling. Now, yesterday, what you saw inside of Twitter was a move higher with 35 million shares. So, can we call that a sign of strength? Junior sign of strength out here. Today, you're moving even higher, 24 million shares. Now, in the case of Twitter, it has a lot of resistance out here. Without even taking a look at market profiles, big gap down on February 9th, the top of which is, or I will say, the first level we'd be looking at, that's the correct way to say it, 1712. If it can close above 1712, then you're looking at a resistance zone of 1805. So that is, with regard to what is it doing out here and where is it headed to, let's put on our market profiles just for the heck of it. It's at least formed a bottomish type pattern where it has tested a swing point on light volume. You would not want to see this thing close back below 1569 anytime soon out here, really at all. However, it's got a lot of resistance. A brand new market profile, daily profile, formed today, and the bottom of the box and the center of the box are the same. Same price point, $15.83. That's another indication that this low that came in, short term, we're talking short term here, is a pretty good low. And this says that Twitter ought to bounce up into the 1718 to 1746 range out there. If it can get above both of those areas, then it will go ahead and close the gap, get into the 1807 area. And it could, if it starts to accelerate to the upside, you could actually see out here, I would have to say the target becomes this downdraft out here, which is a price point of about 1960. So, Q's, I don't know what you're doing inside of Twitter, but that's my take technically as to what it is doing out there. So I hope that helps you. I don't see any other questions out here, so that just means we should surf around and check out some other things. But if you're in the den, you'd like me to look at something, I would like to go ahead and look at something out there, something that is important or something that you want to look at. In essence, we've covered, the question is, hey, gold is up, silver's up, and the mining area and sector is down. Yeah. It is. We see these areas of resistance, these 100% moves of a move. So, all that makes sense. By the way, in the case of GDX today, if we didn't mention it before, because I don't think we did, 20 million shares on the day out here. And, is that any really big shakes out here? No, it's really light volume pullback out here. And GDX, no reason for it to not, quite frankly, get down to 2413 out there and test that level. An odd day. The VIX up the way that it is, the S&P up the way that it is, never occurred before. Now, when I say never occurred before, my filter was with a 9% one-day rate of change or greater. It may have happened before with smaller rates of change, but I was just simply going with the info that I had at that time. The same things are in place today that were in place yesterday and the day before that are screaming there is problems in River City. The Russell 2000 still underperforming the Russell 1000. You can see it with a tick to the downside, so to speak. That's on the right-hand side of my screen. And we take a look at the descending tops line out here. Not a good scene for the Russell 2000. Probably the message is when we see the VIX index, should we see the VIX index close above the 50-day exponential moving average, you probably ought to look here being the Russell 2000 as one of the places to head to the short side. Now, and new highs, we're not seeing any, any newer highs going on. 215 inside the NASDAQ composite, at 212 inside the New York Stock Exchange. It still has the declining tops pattern out there. That's never a good thing when you're at all-time highs. But however, price can still continue to move higher out here. So where can it move to? And that's an excellent question. If we take a look at the Dow, its next horizontal trading range number, as it has crushed the monthly level of 20,491, looks like it could head to 20,686. That is the top of the next daily horizontal trading range level. Watch 2491. Any move back below that suggests that, okay, it's tested an area of resistance it can't handle. It's time to start moving lower. And 20,090 is the first test. 19,493 is the next test out there. Inside of the S&P 500. Now, the S&P 500, today's move, this week's move, this is a weekly chart, by the way, that we're looking at, is very positive because it's over 2315. And 2315 then says, well, shoot, why not head up to 2400? That's right, 2400, 2395 out there. And that is where it looks like it is headed. Watch 2315. Any move back below that, and that says, okay, the move higher for the time being is over. Inside of the NDX 100 out here, it's trading at 52.88. As far as I can see, which isn't too far unless I have my glasses on. And right now I don't have my glasses on, but it does suggest 53.52 becomes its next upside target. That is the mid zone of its weekly horizontal trading range boundary line. Russell 2000, we can see it's just simply stuck in the mud as we speak right now. And that's at this 1396 level. We're trading at 1398. That happens to be its daily horizontal trading range boundary line. So not a lot out here as we speak right now. Semiconductors, they are also a stick in the mud. Where does that stick in the mud come from? I don't know, but it's always worth checking on the internet because we might get a correct answer out there. And then here is the semiconductors have run into resistance at the top of their horizontal trading range level, 973.85. We're trading last week was a little doji up at resistance. There's now today 2 dojis in the window. Of course, this is a weekly chart. We don't know whether this week is going to end up being a doji or not, but 973.85 nonetheless is a significant resistance zone for it, not being the semiconductor index. I think we've covered everything. Didn't cover the New York Stock Exchange. Really not necessary. You can't trade it. So we won't spend any time there. Okay, what else should we take a look at? I don't really know. I just don't know. Let's take a look at some individual equities because I want to provide you with some good information. I'll check my email during this breakout here. If you want me to look at something that you're holding and provide you with another set of eyes, and send me an email, steve@tfnn.com. Send me a ping or just give me a call. Even better, 877-927-6648. Great.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's up 76, S&P is up 6, NDX 100 up 18, and one of our top dogs inside the Tiger's Den would like to go take a look at Home Depot. Ticker symbol there is HD. And the way that Top Dog is looking at this is the question was, or is looking at, is this really a consolidation breakout where we can go take a look at the consolidation pattern to come up with a measured move? And we can see here where price, was struggling to get through the 135-ish, 138-ish level. So you've got a really good topping type pattern out here, areas that were tested and have finally been broken through. Not so much on the downside. Home Depot, or you don't know, but Home Depot on February 17th really kind of had a little bit of a breakout, a gap up to the upside. That ended up, in essence, being the support area. So, that could be your measured move. It would look like this. If you're going to try to do it, it wouldn't look like that. You have to actually grab the correct tool. So it would look something like this as far as your what I would use as my consolidation type pattern. Then I just simply go re-measure that again, and then just simply add the consolidation to the top so that we can come up with a projected price. So this is going to give us an approximation here of Home Depot over the long haul, heading to the 156 level. I don't know if that's what you were taking a look at, Top Dog, or not. Let's take a look at the A to B equals CD pattern that we can find inside of Home Depot. So we're going to take a look at the bullish cases for Home Depot, and then we're going to also see if we can find anything that might be problematic. I like that word, problematic, for Home Depot. In the A to B equals CD, this pattern here is much easier to visually see and what it has done. Now, your A point out here for the A to B equals CD pattern takes us down into the bottom from November the 11th. That is, by the way, 2016. The actual B point looks like, let's get the correct one. December 15th, the high was 137.32, 137.24. Yep, that's it. So it is the trading session from December 15th. By the way, that had volume of 5.8 million shares. Hardly a retracement, but still a retracement out here that was down into the trading day of January 6th. Now, the 137.32 level had volume there of about 5 million shares, 5.8 million shares, was taken on with wide price spread, accelerated volume on the trading session of January 23rd. So this gives us a price projection of 151.18. If I just put where'd that horizontal line go to? Where is that up at? That's up at the 156.20 area. So 151.18 is your 1-to-1 A to B equals CD. And the 156 area, which is the measured move, also happens to be about the 1.272 expansion of that pattern. So at this stage of the game, let me put this on a monthly basis, make sure there's nothing resistance-wise to the left-hand side. And the response is no, there is not. So that's good. By the way, on a monthly basis, the swing point that it's over had 91 million shares. It's only the 15th. You're at 34 million shares. But because we're at the middle of February here, it's not exactly, doesn't have the volume indication out there. But that is where the longer-term price objective should be. The only problem that I can see out here, top dog, is that price is moving higher, doing less relative energy. Now, that alone is not a problem. Let's take a look at the wave counts as well, as long as we're doing this. So we're going to go back from that swing point from back in November. We can see we are now in wave number 6 out of 7. So just something to be somewhat cautious. Well, we are in potentially wave number 6 because it could also be, instead of 6, or which would be F, right? It could be 5. So it's in 5 or 6 out here. But the key here is prices moving higher, doing less relative energy. That's the black diagonal line that you see on my screen. Let's just get rid of those wave counts out here. And that's okay until we see some type of bearish reversal signal. So if we see that inside Home Depot, should that occur, that would tell us that, okay, a short-term top has come in it. And then with regard to where would you target where this would pull back to in case you're not in it and you're looking to get in it for some reason, then what we would, and the reason would be to make money, obviously, then what you would do is you would say, hey, what happens at 138.89, the top of its TAS daily profile? Does that hold on a pullback? Does price close inside that, meaning below 138.89? And if so, then your target for a buy, because that center of the box on a daily basis is closer to the bottom, would be your 136.99 area. So that's what I would be looking at. Right now, you've got a confirmed A to B equals CD to the upside, and that takes you into the 151.18 level. Just watch for some type of bearish reversal signal, and whether or not it continues to move higher with less relative energy out there. That could be a bit of a stumbling block inside of Home Depot. Hope that helps you out. All right, I don't see any other requests out there, but I'm taking them all. We're spinning the I don't know, the records, the CD. Okay, there we go. Don says he's got the whole 9 yards out there. Yeah, so Don, we got the whole 9 yards. Thanks. Must have been listening to yesterday's archive out there. And so we did get that, the ammo belt. So that is wonderful. Thanks for responding to that, and that is helpful. I don't see any other requests out here. So let's go look at things that are moving and grooving, and I'll just wait for other requests to come in. Wix, let's go take a look at Wix.com, up 17%. Looks like out on earnings, operating loss of 4.7 million shares versus a loss of 10 million shares. Man, that is great to celebrate. These guys are losing money on revenue of 84 million shares. You're nothing like giving away the farm. And then, of course, people digging the fact they've got so many users so that they can just figure out how to lose more money. Or something along those lines. In any event, technically speaking, shareholders are digging this. This thing is trading above its most recent swing point from January 26th. That had 465,000 shares, already at 1.7 million shares. Where is this headed to? Lord only knows out here. Probably we are at all-time highs. They're losing a bundle of money out here. And, how do you, I couldn't look at this chart here, this, by the way, the monthly chart, and really give you a great price projection as to where Wix is headed to. So that means I just simply won't. Although somebody in the Tiger's Den said to lie about that, but I am not going to do that. Jay wants to look at Chewie, C-H-U-Y. I thought Chewie was a Star Wars character out there. Is that the case? I could be wrong on that. You don't want me to start taking questions on Star Wars, because I basically would just simply flunk. But if we do take a look at Chewy Holdings, is that even the proper pronunciation out there? C-H-U-Y. That much I know that I can get Tex-Mex. Oh. Well, this Tex-Mex. The question is this an A to B equals CD to the upside, or an A to B equals CD to the downside? And I don't know the answer to that question here just yet. But if we take a look at what is this thing doing, let me also go over to my other chart out here, just punch it up and see if there's anything else that pops up. The reason why I say we don't know which is which out here, I'm going to turn off the market profiles, and we'll come back to it. The reason I say that is because it looks like it's approximately a 0.618 retracement of a set of swing points. 2 of them, by the way. Let's go take a look at those. There we go. Not expansions, we want retracement. So from its high back here in July 2016 to the low makes a retracement, an exact 0.786 retracement. Oftentimes that can mark the C point of an A to B equals CD to the downside. So if that's the pattern that is in play here inside of Chewy Holdings, that's going to go ahead and give you a price projection to the downside of about 2341 to 2018. Now, it could also be an A to B equals CD to the upside, because if we take a look at its retracement here, we'll do this real quickly, from the low of October 11th to the high of December 13th, nearly a 0.786 retracement as well. Could be an A to B equals CD to the upside going on. So when we come back from this break, I'll spend a little more time chewing this one over as we take a look at Chewy's Holdings, CHUY. Steve Rhodes with TFNN. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts, and keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So as we take a look at Chewy, the one set of technical tools that this chart seems to be following really well out here is Tom DeMark system. The red numbers out here are referred to as the Tom DeMark combo. The blue numbers are the Tom DeMark sequential, and the black numbers are Tom DeMark setup. You look for 13s in blue and red. You look for 9s in black out here. And you can see when this thing made a high back right around the December 9th time frame, you had a little TD combo count. And then 2 days later, you had a TD setup, a number 9 count, a little bearish evening star candle. That's at the top. As this thing made its bottom, very close to the bottom back here in February, in the $29 area, made both a TD sequential and TD combo count. We now have price above Stevie's red line. We also have price above, close above the session 4 bars earlier. So Tom DeMark has given this a buy signal out here. You're traveling above Stevie's red line. That's a little bit of a buy signal and some good support, certainly at 28.93. So I would say watch the Tom DeMark counts out here for determining your next course of action inside of Chewy, because it's following those pretty well. I had a request to take a look at MUR is a ticker symbol. I think that's Murphy Oil. Yep, Murphy Oil out here for one of our listeners. So thanks for sending in an email. Our request. So what is MUR doing out here? That's an excellent question, MUR. I'm going to put it on my other chart as well, just see if there's anything that pops up. And you are very welcome there, Jay, for taking a look at that. In the case of Murphy Oil, you can see some little doji candles out here. They don't mean much to me, really, at lows, only at highs do they have any kind of a meaning. The meaning is that the market's a little confused. Here's what I'd be watching for inside of Murphy Oil. If you're long, you want to start seeing this thing closing above Stevie's red line here, that oscillator and change line. Why do I say that? If you look at the bottom panel of my screen, you can see we have a falling price oscillator below zero. It doesn't get too much more bearish than that. Let's try to figure out where the wave counts ought to begin at. So right there, let's do those on the way down as well, just to see. So that didn't work out for you. So that's going to recycle here, and it's going to go ahead and say you're probably in wave, 2 or so. So not until this closes above Stevie's red line out here, which is 28.53, does it suggest getting into a long position inside of Murphy's Oil, MUR, out there. If I turn on the market profile, so we'll do that here real quickly for you, see if that provides us with any information out here. And it's below even the daily profile. So stay away. Wait for maybe a test of the swing point from August 2nd out there on less than 6.8 million shares. That could give you a potential bottoming signal. The final request was for Bud. This Bud is for you. Don't know what you're doing inside of Bud, meaning if you're long, if you're short, if you're in it, if you're not in it, and the info you're looking for. What we can say is it's trading right now today and yesterday above its TAS weekly profile. So that alone is a nice little positive. You sure hate to see this high volume untested low from December the 1st out there, 7.4 million shares. So if Bud, this Bud for you, ever does fall back out of bed again, that's where it will fall to. Nonetheless, you have all kinds of gaps and stuff like this and volume bars out here. So there's a huge supply line that Bud needs to be able to get through. But a slight positive as long as it closes the week out above 107.47. But you're going to have a lot of resistance all the way up inside of this equity. So, folks, stay tuned. Our favorite polar bear, yours and mine, David White, he's going to be up next. And because it's Wonderful Wednesday, we've got Tom O'Brien from 3 to 5. Dow is up 95. S&P is up 9. Very interesting. As Artie Johnson would say, there's no reason to fire at the shorts. The market is giving you gifts out here with the VIX being up 83 cents. Just wait for that to see if that can possibly ever close above its 50-day exponential moving average. Otherwise, it's mean and green to the upside. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.